This time in the budget, the government has acknowledged very clearly the importance of the whole private equity space. What is the change that you've seen in the last 2 years in terms of the behavior of FDI flows?
The way the government is thinking about the industry is very welcome. Because if you step back and think about it, the industry has contributed enormously to national development. And if you go back a few years ago, we used to get $20-30 billion a year of PE and VC inflows. Last year, that number touched $50 billion. And it's happened basically because foreign direct strategic investors have actually have become very insular globally. But PE and VC investors have actually replaced them. The second important factor is that PE and VC now actually dwarfs FII inflows. It not just dwarfs FII inflows, but it's actually also very stable. So FII inflows are very volatile. The Fed is tightening. Ukraine war is happening, right? Last 5 months, we've had nearly $13-14 billion of outflows. How much of that is India's fault? But PE investors every month are getting in $1-2 billion of inflows into the country. I think the government very wisely is realizing that this is a category of investors that is long-term in nature, stable, and increasing its allocation to India. Despite all of this, I think it does not mean that the conditions for it are perfect. There are still obviously issues. Those issues often come into the public domain. And also, it doesn't mean that just because we get $50 billion, it doesn't mean that we can't get $75 billion. There are things we can do to get a much greater market share. Just like the government has a number of very progressive policies, the PLI policy, atmanirbhar Bharat, etc. I think we should aspire for taking PE and VC both inflows to a next level and also creating a PE and VC community locally, the Atmanirbhar Bharat version of it locally. I think the government is now seized with that. Our submission to the government has been that as you set up this high-level committee, it's of course important to focus on whatever pain points have been coming up, and that they have been hearing. And there's a great opportunity to focus on those pain points, but also think about a 10-year roadmap for what can accelerate this growth rate and take it to a very different level.
You said that strategic investors are getting insular. So one is, why is that happening? And you're talking about a local, something like a PLI scheme, having an Atmanirbhar strong community of local PE investors. What is the situation today on the ground?
Post the global financial crisis, a lot of strategics felt like there were issues in their home markets. And so, rightly so, they first fortified their home market positions. I think in some cases, a lot of global strategics took support from home countries. Let's not forget that a lot of sovereigns raised the barrier a little bit for cross-border investments. A lot of countries also have made investments from certain sovereigns difficult, right? Mm-hmm. Now, I think all of this has, of course, had its impact, on cross-border flows in general. Let me address the second point that you raised. The domestic institutional investor, which is largely the domestic mutual fund, is actually critical to the markets. And the domestic institutional investor comes in via two forms: the insurance companies and the domestic mutual funds. all of them powered by the domestic equity investor. Fortunately for us, so much wealth which has got created in the last 10 years has actually been shared with domestics via this category of institutions, right? Today, as a consequence of that, when we have had sell-offs for extraneous reasons, they've actually been cushioned by domestic institutions. So we have a much, much more mature market. Now, the question is, what is the policy framework we want to create? Is the question that comes up to do this. So in my mind, I think these are questions which a high-level committee must look at. What is it that we do to build a vibrant domestic private equity and venture capital industry? This is a very important question we must answer. So while we solve the short-term problems that the private equity industry, which is today largely foreign, while we answer those questions, I think we must not forget that there's an opportunity to think about what the long-term roadmap is.
But how do you do that? What are the one or two things that the policy would require?
What I'm saying is that a learned committee can look into all the issues. There are issues on taxation. There could be other issues like, private equity could do distributions of shares in species. That can be a facilitatory move, right? Which is, I'll give you explain that. Private equity companies hold shares in unlisted companies or listed companies, right? One way that they monetize it by selling those, and then they distribute that to their companies. Sometimes what they can do is they can just distribute those to unit holders. Measures like that in the West are facilitated in the West. So we could study measures that exist in the West, which have contributed to the growth of the private equity industry. We should look at our framework that exists in each regulator, IRDA, so that it becomes easier for insurance companies to invest, because insurers are big investors in private equity in the West. Today, the industry, whether it is domestic or foreign, has not played a big role in funding MSMEs. Okay. MSMEs contribute disproportionately to the nation's development and particularly employment. What we should do, and again, the high-level committee can look at this, is what incentives can come up to encourage PE and VC to invest in MSMEs.
Where will the money come from?
This is an asset class which creates returns. And when it does well, it is usually self-funding. If you do the math, a decent fund creates 2.5x returns in 5 years. Okay. And if it creates 2.5x returns in 5 years, it means that if an industry is growing at 15% or 20%, it means that it is always self-funding. Because just do the math, it will always have more capital than it can deploy. So the money exists. What we need to do is to widen the ambit of some of these funds more rapidly than currently exists.
If you look at the PLI scheme, there is a global part, there's a domestic part in all the various things. If you're going to look at a similar model, one would also, from a government's perspective, look at how they create funds which are specific to India. So do you see that also happening when you talk about Atmanirbhar?
I don't think most global firms will start India-specific funds. I don't think so. I think the model for global firms, I think they generally they don't like country funds, and this is not true about just India. I think it's true in most places. It's just that a continent specific fund just gives you diversification. And what happens is sometimes countries go through ups and downs. For example, a country can go through a period where markets are very rich, and what a continent fund can give you is the ability to just wait that out.
The government has also talked about this whole monetization of assets, which
Yes.
obviously brings in a large amount of opportunities to private equity funds. How do you see this opportunity as a global PE investor, and also doing it in conjunction with Indian private equity funds?
I think it's a very interesting opportunity, and I don't think we need to make a distinction between domestic and international investors. I see the opportunity as a holistic opportunity for investors across across both categories. So the way this will probably land up working itself out is that investors will probably land up participating in this through companies that they have stakes in, either control or non-control. That doesn't matter. So, as you know, that there are literally hundreds of companies that private equity investors have stakes in the country, and there are asset monetization which is going to happen in everything ranging from roads to ports to all other kind of assets. And so, if anything comes up, I think when that requires capital, I think investors will probably have the opportunity to step up and fund those transactions. And I think that will actually be a very interesting opportunity, because that will result in obviously equity inflows into the country.
So they will put in equity in the companies where they already have
stakes in. There could be rights issues, there could be preferential issues. So I think it will be a very interesting opportunity.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.